Hello, everyone, and welcome back for another Friday Fratarcangeli Market Update. Here we sit well into the third quarter earnings. 29% of companies have reported earnings with a robust return of 87% beating on the top line and 83% beating on their estimates on the bottom line. That's well ahead of the averages that we've seen these last few years. And since 2011, we've averaged around 79% of companies that have beat earnings both top and bottom line. So we're certainly seeing momentum to the benefit. We also had some earnings reports recently as today and yesterday, and it's a mixed bag. The market is consolidating and kind of asserting where we go next. I'll talk more about that soon, but we have a aggregate growth of revenue at just under 8% year over year, and we're looking at over 15% on the earnings growth year over year as well. Very robust. And I mentioned this last conversation 2 weeks ago. We're on our fifth consecutive year of double-digit earnings growth, and this is unprecedented. And even more interesting is the projected earnings being increased. And we're looking at 13% next year, and possibly in 2027, 14% earnings growth. And so we're seeing a very robust expansion occur in earnings in the S&P 500 and the broad markets in general. And I think it's a direct correlation to the efficiencies and productivity that technological advancements have brought to us, going back to my early days in the industry with the internet in the early 90s. And so I think this is a continuation, in addition to the fact that we have a lot of regulatory red tape getting peeled back, which is allowing business acumen to move forward, banks to lend, and clarity on what needs to happen next. In addition to that, we had the Fed speak yesterday, lower interest rates by 1/4 basis point, sort of direct towards December as a potential reduction in rates again. I think that's being interpreted as we speak, which is causing the market to whipsaw back and forth, which is expected after every Fed announcement as well as meeting. So we'll see how that's interpreted here over the next couple days. But in general, we're seeing accommodating Fed. We're seeing regulation that's very accommodating for business. We're seeing earnings growth, and we're seeing expansion and efficiencies due to technological advancements. And in addition to that, we've got some clarity coming down the pipe, potentially here with the China-U.S. deal having a reprieve for 1 year. That would be extremely powerful for many of our manufacturing companies locally here in the Midwest, as well as all over the country and possibly the world. I think these are all positive things, but let's not forget, next year is an election year, mind you, a midterm election year. That creates uncertainty, which the market never likes, and creates more volatility. So we don't change our path. We stay the course. We continue to dollar cost average. We make sure that we have enough liquidity, and we make sure our long-term investments are positioned for the upside to combat inflation. The last thing I'm going to tell you today is I have a gauge. I've been doing this 30 years. I get calls every day. I communicate every day. I have meetings every day, and I take a gauge for the general feel where they think the economy is, where the markets are. And I'm getting a lot of pessimism relative to, I think we're going to contract. I think we're going to pull back from very smart heads of industry. There's something called the emotional trend in the market. We're at the beginning phase of something called optimism. Through optimism, we then go to euphoria. When we hit euphoria, when I have more people optimistic than not, and I see more people wanting to buy rather than be more cautious, that's when I get cautious. And right now, I see quite the opposite. You're going to see a lot of market volatility. We don't react. We stay the course. We dollar cost average. We monitor the facts, the fundamentals, and we make sure that we have enough liquidity. So just know this, Fratarcangeli Wealth Management, our team here are all hands on deck, ready for that next turn, preparing for year end, and as well preparing for next year. And I look forward to seeing you all soon. Bye for now.